Good afternoon, students. In this lecture, we will study about the retained earning. We will start with the meaning of the retained earning. What is retained earning? In simple word, we can say undistributed profit is called as the retained earning. For example, when the company earns a profit, out of that profit, company will not utilize the full amount of profit for the declaration of dividend to the shareholders. But instead of that, company will keep some amount as a reserve. That reserve is called as the retained earning. Retained earning means net profit minus dividend. Whatever the profit is earned by the company, out of that profit, company will use some amount for the declaration or for the distribution of the dividend to the shareholder. After making the payment of dividend to the shareholder, whatever the profit is remaining, that profit is called as the retained earning. For example, if the company's net profit is 100 rupees and company is utilizing 30 rupees for the declaration of dividend, then remaining 70 rupees is known as the retained earning. The part of the profit which the company keeps as a reserve, that reserve is called as the retained earning. These retained earning company can utilize for the expansion of the business, for the repayment of the preference shares, for the repayment of the debenture. So company can use this reserve for any purpose. Company converts its reserve for the issue of the bonus shares to the equity shareholder. Now what is a bonus share? We can say bonus shares are the fully paid equity shares given to the existing equity shareholder free of cost. That is called as a bonus share. When the company wants to capitalize the retained earning, company will use that retained earning for the issue of the bonus share. That is called as a capitalization of the profit. In short, when the company wants to capitalize the retained earning, company will issue bonus share out of that retained earning. That is called as capitalization of the profit. This capitalization of profit by issue of bonus share is known as plowing back of profit or the self-financing. This reserve or this retained earning company can use for the expansion of the business, for the modernization of the business. So when the company is reinvesting this profit in a business, it is called as the plowing back of profit or the self-financing. Retained earning is an important source of the long-term finance. Now, when the company is incurring a profit and keep some amount as a reserve, it will be there in a business permanently or for the longer period of time. It is simple and the cheapest source of finance. Now, when the company is collecting the capital by issue of the shares or by collecting the capital from the borrowed sources, company has to either give the dividend or give the interest for using of that money. But here in case of the retained earning, as it is a self-financing or as it is a company's own profit, company will not have to make any payment of interest or the dividend on that retained earning. Retained earning is an internal source of finance. That is, company is creating the retained earning from its within the company only. So it is an internal source of finance. Next, we'll move towards the merits of the retained earning. First of all, this retained earning is a permanent source of finance. Permanent source means what? This retained earning company don't have to make the repayment to anyone. This retained earning company can utilize till the time of the winding up of the company or till the time of the liquidation of the company. When the company has decided to shut down the business or when the company has decided to liquidize the business, what company will do? Company will sell out all the asset and make the payment of the liabilities. In that case, this retained earning is the internal source. So company don't have to make the repayment of retain earning to anyone. So it is a permanent capital. Company can utilize till the time of the winding up of the company or the liquidization of the company. Next is the no explicit cost like interest or the dividend. As we have discussed, in case of the retained earning, company does not have to make any payment for the interest or for the dividend, as it is a self-financing. For using this retained earning, company will not have to make a payment of interest or the dividend. Operational freedom or flexibility. Now for the use of the retained earning, there is operational freedom or flexibility is there. That means there is no strict hard and fast rules are there for the use of the retained earning. For example, when we are taking a loan from the bank, we are taking the loan for a particular purpose. For example, for the purchase of the machinery. In that case, we have to make the use of that loan money for the purchase of that machinery only. We cannot use that money for any other purpose as we have taken the loan for that purpose only. But in case of the retained earning, there is full flexibility is there. That means we can use this money for any purpose. We can use the retained earning for the payment of the dividend, for the repayment of the preference shares, for the repayment of the debenture, for the expansion of the business, or for the modernization of the business. Enhance capacity of business to absorb unexpected losses. Every business has having some of the other unexpected losses. It may be man-made or it may be natural disaster. In that case, business has to be ready for bearing their unexpected losses. We can take the recent example of this COVID-19. Because of this COVID-19, since last 3 months, there is a lockdown is there. But during that lockdown period also, businessman has to incur some of the expenditure. For example, expenditure like some amount of salary has to be given to the employees. Now to bear that unexpected losses, if the business has having the good amount of reserve or the good amount of retained earning, company can easily bear with that particular losses. So this retained earning is important for the bearing of the or for the absorbing of the unexpected losses. Next is the demerits of retained earning. The important demerits of the retained earning is dissatisfaction among the shareholders. Now, when the company, as we have already studied that out of the net profit, after deducting the dividend, whatever the amount is remaining, that is called as the retained earning. So naturally, for creating the retained earning, company has to use limited amount or company has to give less amount of dividend to the shareholder. In that case, there is always a conflict is there between the board of directors and the shareholder, as board of director wants to make the more retained earning and shareholder wants more dividend. So when the company wants to create the retained earning, the shareholder will always be dissatisfied as they are getting the less return on their investment. Second is a uncertain source of finance. This retained earning is depend upon the profit of the company. We cannot judge the profit of the company. Profit of the company is always uncertain as it is affected by many different factors. Now, in that case, we cannot assume what will be the profit for the next year. So, it will be very difficult to decide the particular amount or specific amount for the retained earning. So, it is an uncertain source of finance. Next, we'll move towards the determinants of the retained earning. Now, what is the determinants? Determinants means what? To decide the retained earning, there are certain factors are there. Depending upon these factors, the amount of the retained earning will be decided. Now, these are some of the factors depend upon which the amount of the retained earning will be decided. First is the total earning of the company. Now, as we have discussed that retained earning is a part of the profit. or we can say retained earning is an undistributed profit. Now, when the retained earning we have to create, we have to depend upon the profit of the company. More the profit, more will be the retained earning. Less the profit, less will be the retained earning. Second, attitude of top management determines the amount of the retained earning. How much retained earning has to be kept in a business, that will be decided by the board of directors. If the board of directors feels that they want to make more retained earning, then they will make they will keep more amount as a reserve. If they feel that more amount of dividend should be given to the shareholder, then they will keep lesser amount as a retained earning. So these are the two factors related to the earning of the company. For example, first of all, profit determines the amount of the retained earning, and second is the attitude of the top management will determine the amount of the retained earning. Second is the taxation policy. What is the tax? Whatever the income we are incurring, on that income we have to make the payment of the tax. Now this tax rate also determines the amount of the retained earning. For example, if the tax rate is high, for example, whatever the tax we are paying to the government, the rate of the tax is high. Naturally, when the rate of tax is high, company has to make the more amount of payment of tax. If we are paying the more tax, naturally we are able to save the lesser amount in a company. So when the tax rate is high, naturally the retained earning will be less as we are paying the more amount towards the tax. Reverse the condition. When the tax rate is low, that means at that time company is paying the lesser amount of tax, so we can save more amount in a business. So when the tax rate is less, the retained earning will be more. So this taxation policy also determines the amount of the retained earning. Tax rate is high, so that the expenditure will be more and the saving will be less, so retained earning will be less. If the tax rate is less, so that the payment of the tax will be less and the saving will be more. In that case, retained earning will be more. Next is the dividend policy. Now there are mainly two types of dividend policies are there. First is the conservative dividend policy and second is the liberal dividend policy. Now in case of the conservative dividend policy, shareholders are believing to give the lesser amount as a dividend. In that case, naturally the retained earning will be more. Why? Because out of the net profit, we are using little amount for the distribution of the dividend. So naturally, the retained earning will be more. Second is the liberal dividend policy. In this liberal dividend policy, board of directors will fail to give the more rate of dividend. When the rate of dividend is more, naturally the retained earning will be less. So in case of the conservative dividend policy, retained earning will be more, and in case of the liberal dividend policy, the retained earning will be less. Next is the government control. Government prepare or government makes certain policies, rules and regulation. Depending upon this policy, rules and regulation, company has to work out or company has to perform. Even the dividend policy of the company is also depend upon the policies framed by the government. So whatever the policies are framed by the government, depending upon that policy, the company has to frame its own policy. So for the retained earning also, whatever the policies, rules and regulation government has made, company has to follow that rules and regulation. So these are the four factors depending upon which the retained earning will be decided. Now in short, we can say that retained earning is an undistributed profit remain in a business, that is called as a retained earning. When the company earns a profit, company will not utilize the full amount of profit for the declaration of the dividend, but company will keep some amount as a reserve. That reserve is called as a retained earning. That reserve company can utilize for the expansion of the business, for the modernization of the business, for the issue of the bonus share, that is called as the retained earning. In case of the retained earning, there is always a conflict between the shareholder and the board of director, as shareholder wants more dividend and board of director wants to keep more amount as a retained earning. So there is always a conflict is there between the shareholder and the board of director. So we can say in retained earning is one of the important source of internal finance, or we can say retained earning is the only source of internal finance. It is a long term or the permanent source of finance.